Good afternoon. Time to have a look at the markets picture. Starting off with things on the Asian side, we did see those markets ticking up higher, and that's because Hong Kong stocks are the ones who are leading the gains regionally. We did see the Chinese tech stocks also in positive territory, the likes of Tencent and Alibaba. But when you look at what's happening in the Chinese equity space, those markets higher, and part of what's driving the sentiment is that today marks the third straight day that Shanghai, which is an economic hub in China, hasn't reported a positive COVID case, at least outside of the quarantine areas in the city. So markets seeing that as a positive sentiment that's driving through markets. Nonetheless, when we look at the individual performances, Hang Seng Index up 3.25%. Looking at what's happening in Japan, up 0.4% in positive territory. European markets as well seeing to build on that positive momentum as global stocks striving to build the sentiment that has been driven primarily as we look at what's going on in Asia and Europe. And locally, we also had a few company announcements. Pick and Pay announcing their full year numbers, also putting forward a new strategy to the market. So we'll have that interview a little bit later that will actually play for you tomorrow afternoon when we do catch up with the Chief Transformation Officer. But to talk to us about the latest in terms of market news, we are joined by Makwe Masilela from Makwe Fund Managers. Thank you so much for joining us this afternoon. I mean, when we look at the positive sentiment, I mentioned the one thing being the aspect of what's happening with the COVID situation in China. What else is driving our markets in particular higher?
Afternoon to you and to the viewers. One other thing is that we can see that the guys are also easing when it comes to the crackdowns, when it comes to the tech sector. Hence, we see our likes of our next pass, the Tencent, as we mentioned, also up, and then also the likes of Proxas, and also with the easing of the COVID-19 lockdowns, that also is helping commodity prices, which I see they're up. And back home here, you see the likes of Yakumba being up, the likes of Exaro, but also the report that we got when it comes to the Q1 GDP for the Eurozone, it was stronger than expected. Also seeing that the employment is going up. But yes, we continue to grapple with this issue about the slowing economy, and markets will continue to watch for clues when it comes to policymakers. And today we'll be watching the US Fed chair as he's talking to say that these near-term interest rates, are they going to be too aggressive or not? And also we can see that it's spilling into the dollar itself, which managed to pause the rally that we've seen, driving the US dollar to almost a 2-decade high. And as a result, we see the rand being firmer, and I guess the rand is also getting a lift from strong commodity prices.
Before we talk about stuff on the local aspect, you touched about the, interest rates. And I'm wondering whether at the back of your mind, you're thinking of a possible credibility scenario when it comes to central banks, especially the Fed in this particular case. Because I suppose the one dichotomy is that you either, let inflation run hot in order to sort of keep, growth positive. Yet at the same time, on the other hand, it's either you deal with the inflation and risk a recession. It's sort of a tricky one that the central banks find themselves in.
Definitely it is. But remember, in 1994, Alan Greenspan managed to almost double their interest rates to almost 6% without causing a recession. So there is that likelihood that we can still get that kind of soft landing. Unfortunately, the credibility when it comes to the current central bankers, I think it's out of the window, because I think they started losing their credibility when the guys were in denial, telling us that the inflation that we are seeing is temporary, and only to come later to realize that no, it's not. So I think the market started doubting them then. But yes, we all believe that the guys are probably behind the curve.
Let's stay stateside. Elon Musk putting a pause on the Twitter deal until he can finalize the exact number of bots that Twitter has filed in the SEC filings, that is. Do you think that deal's going to go through? Because some are speculating that he might be pushing this share price higher share price lower after noticing that he may be overpaying, given that the NASDAQ has underperformed.
If the stock price continue to go down, unfortunately, The offer he made is 44 billion. That's it. So he has to stick to that. So yes, it's only fair for him. I agree with him that you have to verify all these numbers. It's part of due diligence because you bought the company and made the offer based on certain numbers. Yes, it might be difficult, or the guys have to agree on what formula they need to use to verify those kind of numbers, because he's talking 20 or higher, and the guys, when they filed, they mentioned less than 5%. So that's a tricky one, and you are right, there are two possibilities. Either he will try to lower the price, or he will walk away from the deal. And already we know that this deal has been very chaotic.
So let's bring things locally. We had Pick n Pay releasing their financials. What did you make of the numbers as well as their new strategy?
As expected, very good numbers. And yes, that's despite, the July unrest, stuff like that. But look at their turnover. The group managed to increase their turnover by 5.2%, even though they had 2.7 billion in lost sales. And I guess 1.8 thereof is because of the July unrest, and 900 million is because of the restrictions when it comes to liquor trading. And the guys continue to increase market share, especially when it comes to Pick n Pay clothing. And also when it comes to their refurbished stores, they continue to attract more new numbers. And as well, their online on-demand grocery app has been helping, and they also announced their partnership with Take a Lot that will start delivering groceries for them. And yes, increasing profits as headline earnings per share by 14.5% and rewarding shareholders by increasing dividends by 23%. I guess that's a good set of results, and going forward, we expect them to continue to do wonders.
Before I let you go, one event that you are going to be keeping an eye on for the rest of the week.
We're going to be looking at the CPI, which is coming tomorrow. We know it's sitting at 5.9%. Also, the retail sales for March, we know that they've been down 0.9%. And obviously, on Thursday, we'll be watching what is happening with our interest rates. Whether will they try to copy the other guys to try to be more aggressive, or they'll be patient.
All right, and speaking of retail sales, we do have the U.S. retail sales figure that analysts will be keeping an eye on for clues in terms of how the U.S. consumer is faring in an economy that has surging inflation, and hopefully that will give us some indication in terms of where we're going when it comes to aggressive interest rates in the U.S. However, that is it from me.